Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Well, let's take a look at some stocks on the move today in Europe. I'm Stephen Carroll with Lizzie Burden, and we're joined by Bloomberg reporter Chloe Mele. Chloe, good morning. Let's start then with ASML. The surge in shares after their results. What's pushing them so high?
Yeah, fantastic day for ASML today and for that chip sector in Europe in general. And the results from ASML drove higher all of those names like Infineon, BE Semi. All of them were in the green and quite strongly in the green this morning. So the reason for this is because ASML reported orders for the fourth quarter that were nearly double what analysts had expected. So a major beat there. And then its outlook for 2026 was also quite a beat. And it also announced a 12 billion euro buyback by the end of 2028. And also about 1,700 job cuts to make its operations a bit more streamlined, a bit more agile. And all of that has really led the shares much higher this morning. And the CEO said that clients were turning more and more optimistic about AI demand, which explains that record order intake and also bodes quite well for the coming quarters. So this is kind of yet another sign of this AI momentum after we already had an upbeat outlook from TSMC recently, which is a big customer for ASML. And ASML is particularly well positioned within that kind of chip equipment sector because it's the only producer of a certain kind of machine that is needed to make a really advanced semiconductors. And so if it does well, that means that TSMC is doing well, it means that Nvidia is doing well, and it means that AI demand is very strong. And so that has really led the shares higher across that sector this morning. So there's a lot of optimism there.
Okay, but it's the opposite story for LVMH this morning, Chloe. A sign of sector weakness perhaps for luxury?
Yes, probably. So the sales from LVMH came in below expectations, and the CEO said that the outlook was quite uncertain, at least in the near term, even though it might be a little bit better in the longer term. And that has dragged down the rest of the luxury sector this morning, all in the red. So Christian Dior, Hermes, Kering, all of those were down this morning. It's an interesting reversal given that at the beginning of the earnings season, there was quite a lot of enthusiasm from investors because we had quite good results from the first few companies that reported. So Burberry and Richemont came out with quite good numbers, quite upbeat outlooks. But LVMH really is the bellwether for this industry. So the fact that numbers were weak is really not very encouraging. And it perhaps shows that the results from Burberry and Richemont maybe were a little bit more company specific rather than indicative of a wider rebound. And, you know, we know that Richemont is more exposed to jewelry, for example, which is much more resilient. And Burberry is also undergoing a turnaround. So that might have been why it was doing better. So it looks like the journey back to growth for the luxury sector is looking a little bumpy based on those LVMH numbers.
Okay, and then to Volvo Trucks and their latest earnings statement. What's been the reaction?
Yeah, so it's been a tough few months for the truck industry, but things are looking up according to Volvo. So they raised their outlook for the European truck market, and they also said that they were expecting better retail sales in North America this year as well. So this shows that perhaps the worst is over for this market after quite a prolonged downturn there, which was particularly bad in North America. Sales have been declining in the region for quite a while, and that was because of a range of factors. And, you know, we had regulatory uncertainty, but then also more importantly, we had tariffs, which meant that there were fewer goods to transport, therefore less demand for trucks. And then there were tariffs that were imposed on the truck makers themselves. So there was a lot of tariff uncertainty that was weighing on that sector. But now there are signs of maybe things stabilizing, of orders picking up again. And even though the company said that North and South America was still slightly weaker regions, so it's a tentative recovery. But it seems that things are getting a little better for Volvo, and that bodes potentially quite well for peers like Daimler Truck as well.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.